Okay, confirm you can see my screen.
Yes, I can see it.
All right. Okay, once again, good evening and welcome to class. So today we're going to do something very, very interesting. Uh, and that's still talking about our Fibonacci. But just a quick recap on what we have done. Okay, as of the last class, we talked about drawing trend lines. Okay, and we talked about how we can draw trend lines in an uptrend and trend line in a downtrend. Okay, and I did mention in that lecture that drawing trend line is simply connecting the A's and the C's of the ABCD price swing. So if you remember the ABCD price swing, be it uptrend or downtrend, all you need to do is to identify the A, connect the A to the C. That gives you your long-term trend line. That is the first of all your trend lines. And then as the market progresses, the market do a lot of movement, and sometimes the market want to get to its destination quickly. Okay. So if you know how to draw trend lines, for instance, this chart that we are looking at that's currently staring at us, there are several opportunities. Okay, that whoever is a trader, that took this market, there are several opportunities that were available for the person to cash out. And such opportunities are what I'm going to mark out now. So for instance, I pick my trend line, I connect this to this, right? You can trade the trend line break. Pick my trend line, I connect this to this, can trade the trend line break. I pick my this, I connect this to this. You can trade the trend line break here. Okay. And then if I pick my trend line, I connect this to this, and then this to this, you can trade the trend line break. And you can see this trend line, you can see the retest of this trend line here. You can also trade this retest. And that is also like a a previous support that turns a resistance. Okay. And then if you look at this, you can also do this right here. And you can trade the trend line break. And of course, this one, you can trade the trend line break. And then I still have this one. You can trade the trend line break. So see all these many opportunities, you know, on this one powerful trend, okay, that went down. So it's this market started from here, okay, market started from here, and then if you put your Fibonacci from here and come down all the way to this low, I see that that market came all the way to 78.6 level and then started falling down. Okay, so I mean, with this, you can quickly make an entry decision, okay, with your trader. So the trend lines, number one, they help you to if I okay, let's see this current market now. If you look at this current market, let's look at it from here, click here, you can see the trend line break and retest. So supposed to be selling, additional sell. Market is going to go down the more. Okay, so it's very important. So I mean, with the trend line, you can use the trend line as a tool to determine direction. You can also use the trend line as a tool to determine your trigger when you enter the trade. Okay. So, right. So it's important that you practice it, you know, try to try to try to see how well you understand the concept, and then try your hands on it and see if it's actually going to give you the result that we talk about. Okay, so there are many ways you can apply it. But I mean, generally, it's just for you to ensure that what you have learned, you are testing it, and you want to know if it's actually working or not. Okay, so I mean, just to look back, and then we talked about Fibonacci's. Okay, and we mentioned that we have the retracement level and the extension level. We talked about the Fibonacci sequence, the number that tends to infinity, and how the Fibonacci numbers were coined, and of course how natural occurring phenomena, are confirming, or aligning up with the Fibonacci numbers. And that gives us a strong assurance that if we apply it to the forex market, it will probably help us, to make better decision of trading. And over time, how well it work. Okay, if you take your time to use the Fibonacci, like I said before, is one of the most powerful, if not the most powerful tool as far as the forex trading is concerned. But then you need to know how to use it. A lot of people are confused of how to draw the Fibonacci. Am I going to start from the top? Am I going to start from the bottom? So one thing you need to be clear with is every trading platform has Fibonacci, and the way and manner they appear, and also the way and manner they are applied. Okay, so this platform that you see, this MetaTrader 4, MetaTrader 5, if you download MetaTrader 4 for the first time, you are not going to see your Fibonacci like this. So what you are seeing is a Fibonacci that I have carefully formatted by myself. Okay, I have carefully put these levels by myself. When you download it for the first time, you are not going to see all these levels. Okay, one minute. Hello, Tony. Alpha, are they middle of something? I just needed to take your call. So hydraulic is frozen. It's frozen around the body. I don't have it. Okay. Yeah. I don't have. Sometimes when I sweat, you stop this better for now. Okay? Leave it. Hello, Hanson.
Hello, sir.
Sorry, I needed to take that call.
Yeah, it's okay.
Something very important. Okay, so let's just progress with what we're doing. So I was talking about the Fibonacci, right?
Yeah.
So it's very important that you understand the concept and then you know how to apply them. I said the one that I have on my system that you are seeing is something that I have formatted by myself. So if I right click this and open the properties, this is where you do the, you see this place parameters. This is where you change, sorry, levels. This is where you change the parameters, okay?
Mm,
And then in Forex, okay, when you use this code percentage dollar, okay, it will
mm,
display for you, it will display for you the price that correspond to that level. Okay, you see this value now. This level is 141.4% level. This
mm,
is the value, okay, for this chart. So this chart you're looking at is Ali button shares, okay?
mm,
So for this level, for this level, 161.8, this is the price that correspond to it. So you that is trading, you can actually say, so let's do something. Let's say we apply Fibonacci from here. So if this is a top and this is a low, right? So we apply Fibonacci from high to low, from here to here, okay? And stop. Now,
where's your line? The straight line that usually comes out. I can't see it. Or
which
it's
one?
not
This
made it not to be visible.
I'm the one that made it not to be visible. So if you
Mm.
want to see it, I can put it, which is this
I
one.
think that's part of the confusion I usually have too.
Is it not this line you're talking about?
Exactly.
So it's not confused. So this line now, you can decide to make it different color. You can, so a lot of this thing has to do with how well you understand the platform you are trading with. I can decide to say, okay, I want the color to be white. And I say, okay, it shows white.
Okay.
I can say I want the color to be gold. I come here, I change it to gold, and that's it. Becomes gold. Even the
Okay.
color of the level, I can come and say I want the color of the levels to be gold. So I switch to levels and I go to color and I say gold and everything turns gold. You see that? So
Mm.
it's not about, so me, I felt this line is disturbing me, so I don't want to see the line.
No,
So
it's
I
where the line should be from what point to what point. So it's from the high to the low. That's where the line should be, yeah? Because right now, is
No,
it
it's a function. Please understand, it's a function of the trend, the direction of the trend. That's what you look at. Okay. Which side is the market going to? Understand this. This market has moved from down. So let's switch this chart to 4 hour or daily. Okay, so let's use daily to do it. You see this market? This market moved from this point here, this bottom. Look at this bottom here. Okay. This
yeah.
market moved from this bottom all the way to the top, right? And
Mm,
remember, this is a low, this is a low, this is a low. Now, until you get to the highest top, I say pick your trend line, click this bottom, stretch it out to your right. Keep moving it to the chart until it touch the first low. That's it. Okay. So look at where it touches the first low here. And coincidentally, it's 3 points at a time. It touches here, it touches here, it touches here. All these 3 points simultaneously. So this is your
Talking about the first low. Is it the low?
this bottom here.
This bottom, the next low after this bottom.
No. So when you pick it like this and you're moving it to the chart, any week it touch first is your low. Any week. I'm not talking of this side, I'm talking of, so look at what we are considering. This highest point is the top. This is the bottom. Now, all the lows that the chart created before it hits that up, those are the lows you are looking at. So because this chart, so let me assume that we are dealing with this chart when all this one has not formed. Okay, let's say the chart is somewhere here. This is the chart now. It has formed triple top. It has formed top one, top two, top three. Okay. So when the market form triple top, or the market form double top, or the market form double bottom, you are anticipating that a change is going to happen, a change in direction. Okay. So now when I pick this, I says keep moving this thing towards the chart until it touches the first week. Any week it touch first, stop. But in this case, it touches 3 weeks at the same time. Okay. In this particular one, it touches this 3 weeks at the same time. So now, after you draw this trend line and touches this 3 weeks, this market now came like this and break the trend line. Can you see that? The market came, instead, now look at the last point where it touches the trend line. After that last point, the market did not go as high as the highest point again. It didn't come to this up again. Instead, the market created a lower high, and after that lower high, the market came and break the trend line. Now, for those that wants to trade the trend line, the conservative trader, they will say, I will wait for the market to come back and test the trend line. Somebody will say, okay, before the market break the trend line, the market created the support. I will wait for the market to come and test that support, which is here. Look at it. The market break this support, came back to test it. The market break this trend line, came back to test it. Right at this point where the market is testing this trend line, that is where you want to say, sell the market. You take a sell from here. Now you take this sell, your stop loss should be above this highest point. Right here. Maybe 10 pips above, 20 pips above, no problem. Or you can use what we call the ATR, average true range, to determine how many feet you want to go above. Okay. Now, once you do this, you place your sell, you can close your laptop and go. Okay. Now, after placing this your sell, do you know the place where you're supposed to place your take profit? The first take profit is the first support, right? The second one is the next support. The third one is the next support. Are you seeing it? All the support levels are take profit level. All these places are take profit level. Okay. So in this, ideally, if this market is going to do all this move all the way down, we'll say we have from our entry, we have TP1, TP2, TP3, TP4, TP5, TP6, TP7. We have 7 TPs. And then the market started moving. Now the market has hit take profit 1, it has hit take profit 2, it has hit take profit 3, it has hit take profit 4. It's going to take profit 5, take profit 6, and then take profit 7. You see that? Is that clear, Hanson?
Yes, sir.
Okay. So now this move now, what is this? So every time you are drawing your Fibonacci, I want you to have something at the back of your mind. And that thing is your ABCD. Okay. So this is your ABCD. One of the most difficult things for traders is, where do you call the A and where do you call the B? So the best way to identify your A, B, C, and D is to allow the first wave to complete. Let the market complete the first cycle so that you cannot plan to trade the subsequent cycle that are going to form. Okay, what do I mean by that? Let the market create A, B, C, D. Then now, after the market has created A, B, C, D, the market has created the first cycle. Okay, so from the first cycle, you are now waiting for the market to create the second cycle, where your previous C becomes your new A, your D becomes your B, and then you're now waiting for the market to come and create a new C, and from there you now go to the next D. So most times, what people suffer in the market is that they want to catch the market from the very beginning, which is very difficult. Okay, want to catch the market from the very beginning, but we want to see what the market is doing first before we say, okay, we are trading the market. So, and how do we see that? We'll see that the market will create A, B, C, D. Once the market create A, B, C, D, remember when I was explaining this thing the first time, I said, consider the market, consider every A, B, C, D as a game. So when the market move from point A to point B to point C to point D, one game is complete. So the market is not going to play another game. You will now start again. Another A, B, C, D, another game complete. Then you go for the third one until the day the A, B, C, D will now change direction to the downside. Let's say you have been doing the A, B, C, D to the upside. You now wait until the day it now changes direction to the downside. Now, it is faster to see the A, B, C, D in the smaller time frame than the bigger time frame. Okay, there's a topic I'm going to teach you, and I'm sure by the time I explain that topic to you, you will understand it very well. That is talking about time frames. Okay, this movement that you are seeing here, this movement here that you see here, this movement that came all the way from this top here, okay, from this top here, the same way the daily chart started from here, that same way 1 minute started from there, 5 minutes started from there, 10 minutes started, 15 minutes, 30 minutes, 1 hour, 4 hours. They all started from this place the same time. But each of these different time frames, we create their ABCD at different times. Even though all of them started from, okay, let me just do a quick fast track. Just because of this explanation. We are not treating the topic, but I'll just come time frame relationship. Let me just quickly scroll. Okay, so beautiful. So what I'm trying to explain is this. So this is time frame, okay, and this is monthly time frame. We have weekly time frame, okay. Let me just so that I can use. So we have monthly time frame, we have weekly time frame. So can you see that the monthly time frame? This is A, B, C, D. Okay. Now watch this. The same time this monthly started is A, weekly also started A from the same point. But you can see that while monthly is still moving from A to try to go to B, weekly has already done A, B, C, D on top of the monthly. You get that? This A, B, C, D that the weekly has already done. So the weekly has already completed one game. Okay. The monthly is still at the verge of trying to play one game. So if you now add daily onto the weekly, you will see that daily, weekly, monthly all started from the same point. Daily reached its first B first. Okay. Weekly has not gotten there. Weekly is still moving. And in the same vein, if you now add 2 hours or 1 hour to it, you will see clearly where you should be trading to without missing it. If you can look at your chart like this, Hanson, if you can look at your chart like this, and say you can superimpose all the time frame on top of each other, and you can see the beginning where A started from like this. It's very easy. Okay. And I will show you an example. I will show you an example of that by coming to my MetaTrader 4, and let me use the costume candle for you. Okay. All right. So this is the costume candle. So now that candle, this is 1 hour chart, right? So well, let me switch to, sorry, let me let me apply 4 hour. Okay. Now on this 4 hour, I want to apply this consume candle. I want to apply daily. I want to put daily on top of 4 hour. Okay. So you see daily charts on top of 4 hour chart. Okay. So you see all this candle now, they are daily candlestick. Can you see that? You see this one now, this big one, this is daily. Why the small one inside there are 4 hours? Okay. So now let's switch this chart to say gold. Let me explain that thing that happened on gold recently for you. So if you come to gold, okay. So look at gold. Okay, look at gold, right? Look at this daily. Okay, let me remove the candlestick so that you can see the line. Look at it. Okay, I think I should make the candle big so that you can see it. Let me increase the thickness. Change this to 5. Okay. I'll probably make it, I think I should make this chart used, and then make this one black, and make this one brown, and then say, okay. Okay, so look at the daily time frame. Look at this daily time frame now. See this daily time frame. This is if you look at this daily time frame now, you see this candlestick this week, right? Now be looking at the big candle. I want you to look at the big candle. Or should I feel it? Okay, no, okay, let me leave it like that. Be looking at the big candle. Let me put the small candle inside of it. And then let me remove the Akianshin so that it makes sense. Okay, so you see the big candle, and then you see the small candle. Okay, look at the small ones inside the big one. So the big one is daily. The small ones are 4 hour. Okay, now look at this daily now. From here, come all the way down here, then down here. Okay. Now you will see that even though the daily has not created maybe like 2 candles to the left, 2 candles to the right, you can see that the 4 hours has done multiple 2 candles to the left, 2 candles to the right. Okay. So if you start from here, you see 4 hour started from here, came down, and got here, and did 2 candles to the left, 2 candles to the right, and then started going up. Okay, got here, do 2 candles to the left, 2 candles to the right, come down. Yeah, 2 candles to the left, 2 candles to the right, went up a little bit. Now, all this movement now on the 4 hour, they are not visible on the daily. Can't see them on the daily. Okay. So if you now say, let's say we change this candle to weekly. Let's say this candle now, we can also change it to weekly instead of daily. If I change this to weekly, so you see the big weekly. See the weekly. So why this one has done A, B, C, trying to go to D, okay? This one has not even done anything. Do you understand? So in your analysis, like in this analysis now, like this weekly chart now, somebody can use this weekly chart to say, uh, uh, draw your Fibonacci based on the weekly, right? You draw your Fibonacci based on the weekly, and then you trade from this. Remember, see, look at the rich chart, it's 4 hour. Now I'm going to start trading 4 hour until I get to where weekly say this is my D. So if you come back to that presentation, yeah. So I start 4 hour. Let's even just go to the one that is daily. Let's use daily. So I start daily. I started trading daily on top of weekly. Weekly is still going from A to B. But you can see the daily has done A, B, C. So I can trade the C to D of daily on top of weekly because weekly is going up. So naturally, it will carry daily alongside as it's going up. Daily will naturally carry 1 hour, 2 hour, 4 hours, alongside as it's going to its respective direction. Okay. So that's the way it is. So once you understand this, don't worry, by the time we get to this topic, it will make more sense to you. Once you understand this, it will be easy for you to to understand the direction that the market is actually going. Okay. So all these things, they are tools. Like I said, if you once you learn trading forex, you need to also look for tools that will help you in your analysis of the market. Okay. So once you have those tools like this, it's easier for you to say, okay, the market is doing XYZ or ABC. You understand? It's very easy, right? Okay, so let's get into the business of the day. So we're talking about Fibonacci, retracement, and extension in an uptrend. That's what we want to do today. So it's actually both the one for uptrend and downtrend. But usually, once I take the uptrend, there's really no point taking the downtrend because it's just the opposite of the uptrend. Okay. So it's the same presentation. Okay. Um, so we'll still come back to our price swing. This is our price swing. We say the market form A, B, C, D. Okay. And when the market does that, the market start creating higher high, higher low, higher high, higher low. This is your A, B, C, D. A, B, C, D. A, B, C, D. Okay. So we just continue to do this. Okay. But in this structure, what we want to achieve as traders is to be able to trade from C to D. That is, we want to be in the market when the market is moving from point C to point D. Okay. And we did say that if the market retraces to 86, it will extend to 1.18. If you retrace it to 78.6, it will extend to 1.27. And if you retrace it to any of 38.2, 0.5, or 61.8, the market will extend to 161.8 or 1.618. And all these are part of the ratios that we derive from the Fibonacci sequence. Okay. Okay. All right. So having said that, we did cite an example, from the chart. But now, what we want to look at is how the market move from this C to D, because when we say C to D, it looks like we are just talking about a straight line, but it is not a straight line. So what the market does is, because the market cannot move from C to D in a straight line, having carefully observed the way the market move from C to D, come up with 6 different ways the market can move from point C to point D. And these are the 6 different ways. Okay. So the first one is when the market come to point A, B, C, and then the market just quickly go to D. Okay. That's the first one. The second one is when the market creates A, B, and then it acts as if it wants to go to D, but then it comes back into the AB boundary. That is, first it breaks above the B as if it's running, but all of a sudden it comes back into the AB boundary again, looking for a deeper C. Okay, and when it gets the deeper C, the market runs from there to D. And then the third one is when the market hits any of this level and immediately moved to D. Okay, so the market come, it hits 31.8, it moves to D. Hit 50 level, it moves to D. Hit 61.8, moves to D. Hit 78.6, it moves to D. And hit 86, it moves to D. Any of these levels, when the market hit them, the market can just quickly, orally go to the D extension that correspond to that retracement level. And then we now have this other one where after the market gets to B, the market will now do an A, B, C, D back into the AB boundary. Okay. 6 different ways the market moves from C to D. The market does A, B. So what you are looking for is A, B, C, and then you want to go to D. But now the movement of the market from B to C is also an A, B, C, D pattern. So once the market creates your B, the market comes and creates a low. Now, thinking that the market will now go and create a higher low, a higher high, the market now creates a lower high. Okay, and then after the lower high, the market breaks below the previous low and go and create a lower low. This your lower high and this your lower low have to complete a new A, B, C, D. So if we say this is capital A, B, C, D, we can call this small a, small b, small c, small d. Or we call it sub A, sub B, sub C, sub D. Okay? So the market creates sub A, sub B, sub C, sub D. And once the market does that, the market identifies a big C and then goes to what? Big D. Now, the next one is when the market have to repeat that cycle more than once. So it does A, B, C, D, A, B, C, D, A, B, C, D, A, B, C, D, and then the market identify a major C, and then it continues and go and, hit the D extension. Then the last one, which is the sixth one, okay, the sixth one, this is the one that drives everybody crazy. Okay, the market forms AB. After the market forms AB, you expect the market to go to D after the market identifies C. But now the C is the problem. So you can see that there are plenty points that would have caught C. Would have said, oh, this is C, 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 and then this is C. So yes, all of them are C, they are correct, no problem. Ideally, they are all C's. But then there's a deeper C. Okay. So when we are considering C, the deepest low in the AB boundary is our C. So there may be multiple lows inside the AB boundary. Once you identify A and you identify B, there will be several lows inside the AB boundary. But among all the lows in the AB boundary, the lowest one is your C. And usually what happens is that lowest one will naturally coincide with a previous level that correspond to that lowest one. Maybe it was a resistance and the lowest low is a support. You will see that in history, there was a time where that place where we call C now was a resistance, and now it's now turning to a support. Okay. Hanson, is it making sense to you? Hello?
I was speaking, I thought maybe you heard me. I said somehow, but not completely.
Okay.
Yeah.
So if okay, let's go back to that our chart, for instance. Okay. So what we are trying to explain is something like this. Okay, so let's just take a place in this chart anywhere. Okay, we can use to describe. Okay, you can see that this market started from this point, move all the way to this point. Look at it. It moved from this. First time it came here, and then it came here, and then it came here. Okay, I'm doing it because it's lower time frame. But the point I want to make is this. The market came here and came back to this point, right? So you would have said, this is your C. You would have said, this is your C. But after the market attempt to go up, the market couldn't. Instead, the market came and created a deeper C, which is here. So you can
Okay.
see that this place is lower than this one,
Mm.
right?
Mm.
Then the market from here now went break above this I and goes to D. Okay. So
Mm.
we are saying that anytime, okay, that if this is your A, if this is your AB boundary,
Mm.
if we say this is your AB boundary between these 2 points, right? We are
Mm-hmm.
saying that when the market now pull back into the AB band, hey, what do you mean of that? When the market pulls back into this AB boundary, we are saying that the deepest low, so this is a low, this point is a low in the AB boundary. This
Mm.
point is also a low. This deepest one, the one that is deeper out of the two, is your RISI. Okay.
Yeah.
And ideally, usually, it will usually tally with a previous level. So if you come back in this chart, you will see here now, like in this case, you see this place. This was a resistance, right? And then the
Mm-hmm.
market comes back to this resistance. You see, when the market pulled back from here, it
Mm.
didn't get to this resistance. So when the market attempt to go up, it didn't go up. And the market have to come back and look for that resistance here. And when it hits this resistance, we say, this is our C. It hit this resistance, it created a support for you, 2 candles to the left, 2 candles to the right, higher than center week low. And we say, this is our C. So from here now, the market now buys up to the D, or the expected D.
Okay.
Is that clear?
Yeah. Yeah. Much better. And the expected is the highest point, yeah, among all
Yes,
the.
the expected D is the highest point. So if you put your Fibonacci, on the chart from here to here, put it from here to here, okay? So let's just stretch it out. So you can see that now. Let's go back to our Fibonacci analogy. We said if the market pulls back to either 38.2 or 50 or 61.8, Now the market will do what? It will go to 161.8. Now, can you see how well this market, having come back to this level, moved to 61.8 and stopped?
Hmm.
Can you see that?
Yeah.
So this is the efficacy of the Fibonacci. Okay, just one minute. Let me put on this NEPA. They've done what they know how to do best.